Good morning, MMTs. This is the S&P 500. Right now we had the jobs report out, and it was going to be sloppy. It just tells me how everyone was so exuberant over the monthly number again and the monthly unemployment rate. We're going to talk about that. Schnitzer Steel, SCHN, is gapping down $4. That would be one. It's a steel company. I don't know what kind of headline news is. MMTs can find the headline news, but it does like to bounce off the bottom. One of the gainers that we have going on right now is we got a list on the new highs in pre-market. We got Best Buy, BBY. We've got FITB. We've got UOKU. What else do we have in here that's coming out? We got LLY, Eli Lilly. Some of the small caps are on here as well. From the Amex on the new highs, pre-market BHP, LDK, AA. So it's a mix of different sectors. AU is in the gold and miners section. Some of the ones that we just doesn't give us enough yield on our trades, we don't touch, but you can see where some of the beaten down stocks, ATML, people are starting to come into those names because they were underperformers for 2010 and 9 and 8 and 7. Broadcom's back to $45 a share. That's a technology company. Technology companies are in Las Vegas right here, right now, presenting their stuff. So it's not like we have any real high beta on this list. On the downside list, we got Riggs Transocean. We've got BWA. A lot of these are on the NYS. We got various different ones that we don't really cover that much, only because they don't give us enough price movement. So basically what we're going to be looking at trading today is each MMT has an assignment. Their assignment is to use their platform and establish on the opening bell what it's going to be about. We've had 4 days. Today's the 5th day of a full 5-day trading of 2011. That means that on our Saturday training session, we'll be taking the mathematical movement of the Dow, the mathematical movement of the S&P, the mathematical movement of individual equities that started from the low to the high, and that's from that low right elbow, left elbow, low right to the top of that left side of that market. That's where sliding bids come in. We know that 2 out of the 4 days that we had slide that bid, and it was very weak in the brain. Yesterday was one of those days. The prior day was where you were thromboning and you had teeny contraction and delta contraction or expansion on those days, and you had elevation in those numbers, and they stayed elevated in the bid and ask ratio in the brain. That's these things over here, MMTs. The bid and ask ratio was elevated. The IR was elevated. Everything that would tell you where the weakness and the strength was on those days. Day one of the trading, we had a coming right out of the gate on the new year. It was strong and it was robust. You've had 2 days up, then you've had sliding the bid 2 days. You've had very profound directional movements in the S&P on an intraday level. And on the intraday level movement of this S&P is that if you're trading names in the S&P like FCX, the leader, it's a leader in the gold and miners, and basically they follow trend, and or the weakness starts here and then the equities start to put in their tops and slide the bid. The bull, which has been re-leveraging up today because it's job numbers day, is the close was 159.58 and we're at 160.47 by, so we're up $1 there. And an MMT said, oh, well, FCX was going up in pre-market. Too bad he didn't trade that one and get out, because he would have made some money, bottom line. And the thing about it is that trade was there. It's moved up from, it was down to 115.65. It didn't want to go any lower. Learning how to trade pre-market is a wonderful thing. You can buy a position, square it off on the open, long or short, doesn't matter. But here, let's get back to what counts. What counts is that the directional movement on these indexes are key. Because as a market maker that you are, you're in the middle of the transaction of the public transaction tape. That's the public. Let them do their thing. And you know the mechanics of it because you have it all right here. And this is not wrong. It does not. The only thing that's going to be wrong is what you're not wanting or willing to interpretate. That's a breakout on the S&P. Equities break the same way. Equities slide the bid the same way. Equities walk that dog and slide that bid and walk that dog. And that is the intraday market maker range. You've had a knee-jerk reaction. Ben Bernanke's going up on the hill. Big deal. Who cares all about that? What we care about is it's going to create some volatility, but nonetheless, people want to try to own equities. We are overbought on indexes. The key is that the Amazons, the Pricelines, all of the ones, the Apples, the Googles, the FCXs, the Netflixes, the things that have the high beta that burn that bull, that TQQQ is part of that NASDAQ 100. And it likes to put in a top, and it's nice to short that down when that happens, as far as that goes. FCX has already bounced the dollar off of pre-market. They want to own it, obviously. We know that 115.55 was the low. Netflix, on the other hand, closes at 177.99. It's got a slight bid, and they will come down. And what we're looking for on day 5, there's got to be a tiebreaker. So we've had 2 thromboning days up, and equities will come down and bounce, and then equities in the brain would go from 0 to 35 in the IR, and the bid and ask ratio would come off a certain way. It would only tick up, and then stocks were rolled over. So we've had 2 and 2. We're going on the 5th day. That's the tiebreaker. That's today. And basically, if that elevation in the IR and bid and ask ratios there, MMTs, you're good to go. Okay? And we want to see that yesterday slide the bid on the S&P up here. That's at 1275. We did a lot of work on the S&P, and we gave everyone the upper end of those resistance numbers. The live videos there with you are still there. Go back and look at those upper numbers. Right now, today is, do we close above 1275, 1273.5 on the S&P and start building to go higher up? You know, we could go all the way up to 1310. It'll be between the buyer and the seller. We'll have the last say so. So, we got everything that we're going to do. We've got stocks to look for in the 369 opening bell. If you can pull the trigger quickly and you can go with these breakouts, here's a 369 example, MMTs, and you go up. So 2 days in a row out of the 4 days trading, you've gone up, but then they fall weak and they roll over. They go up 369, but then they roll over. Today, we're looking at the opposite on the tiebreaker day, is where you do come down to 369, but you break out, you stay up here in the elevated area, you pull back, you break out, and you make a series of higher highs, and then within all the indexes are range bound between these market maker mathematical lines. And so basically we can see that every time at the lower end of the tape they come in and they walk that dog, and that's just giving you the S&P 500. Equities follow the same. Good luck. Stay tuned. It's 15 minutes to the raw opening bell, and let us do what we do best. Identify, execute, stop loss, profit objective, ratios change, diminishing weakness comes in, it's time to short. The strength comes in on that buy action bar, MMTs. You're looking for that buy action bar. You're looking for them diamonds to be higher, just like in any breakout. Google, Apple, doesn't matter. Same thing on the way down. Teeny up, teeny down, debit me all the way around, and the money adds up. MMT.